Hello friends, welcome back. In this session we are going to learn about the second accounting principle, which is accrual basis accounting. What is accrual basis accounting? Accrual basis accounting is one in which all the accounting is done based on accrual concept and not on cash concept. Let me give you a simple example. What does it mean? Let us say you sell goods on credit to Amazon. If you sell goods on credit to Amazon, then technically the accounting section will assume that the sale has already happened and will book the revenue and create the receivables. Later, when you get the payment, your receivables go down. In short, when you sell goods on Amazon, you make and book the sales, and you create receivables. When you get the money from Amazon, you will reduce the receivables and convert them into cash. This is accounting on accrual basis. As soon as you sell the good, whether on cash or credit, you book the revenue. If it is a cash concept, you only book the revenue if the sales are made in cash. If the sales are made in credit, technically you do not book the revenue. This is the difference between accrual and cash-based accounting. What does accounting take into consideration? It takes accrual-based accounting. Basically, if you sell the goods on credit, all the transaction will be booked in revenue. If the sales are done, it is the accrual-based accounting. Revenues and expenses are not dependent on whether the cash has been received or paid. Here, the concept of cash is irrelevant. If the expenses that you have already spent and you are busy spending, or the revenue is already done, and you notice a payment, you still record it. Let us say you should pay your rent and you do not have the money. You have taken a credit for 2 months. In such a case, you should assume that the expense is already done and you need to book this expense in the accounting records. You cannot say, because I have not paid it, I will not book it. This is accrual accounting. This is basically to give you a true picture, irrespective of whether you pay the rent in 2 days, 3 days, 2 months, or 3 months. You should pay the rent irrespective of whether you have the cash or not. If you pay after some time, it does not mean that you do not have to pay. You should pay the rent. In this sense, accrual accounting basically gives the true picture of the business. It gives the actual position of the company, irrespective of what kind of payment plan and credit terms you have for your company. Accrual accounting gives a fair picture as opposed to a cash-based accounting, which may not give the correct picture when you see it, when you use it. For example, let us say that you have done a sale to Amazon and get the payment in the coming year, and in the coming year you make sales, but you get the payment immediately. What will happen? Basically, your revenue for the current year will be shown at a very low number, and in the coming year, it will be a very high number. Again, in the coming year, it will be shown as a low number. This may not be comparable, and it will show that your revenue is fluctuating, which may not give you a good sign. Technically, in this way, we ensure that the accrual accounting is the best method of accounting, and we book everything as per things that have happened. If it is effective, we get the cash based on our terms of payment plan over expenses. With this, we come to the end of this session. I hope you've enjoyed. Let me know if you have any questions, queries or doubts, and feel free to send us an email. Thank you friends, and have a nice day.